All right, March 23rd, 2025, 7 o'clock on the East Coast. It's beautiful out here in San Diego. I got out on the waves today, which was very nice. I didn't do that well. I haven't been going out as much as I usually do. So, yeah, some nice little size, got some peelers. It was good. Overall, life's great. We've got a lot to talk about today. Let's get it going. Got it. Yep. Barts Charts. All right. First off, what are we going to look at? Well, we've got to look at the New York Stock Exchange index, folks. So here we are, just to kind of reground and recenter ourselves. I think last week we were saying our bias was that we'd be going higher throughout the week. We kind of did. We're kind of flat, right? But you can see here, this is the New York Stock Exchange Index daily chart. And the importance of this red chart here, the reason this is important is that red trend line, it represents a 1-by-1 trend line from the all-time low in the New York Stock Exchange Index, which was October 3rd, 1974. And what we have here is, so today, this line is at 18,434 points. Price and time are the same thing. So as we look at this, I'm trying to make is this a big, deeper correction? Or is this just a stall as we continue to grind higher? For me, I want to see if I'm bullish. I'm just a pattern person, remember. If I'm bullish, I want to see it stay above this red line. And if I'm bearish, I think we might have a little bit more of a correction coming, then a daily or a weekly close below. Right, so you can see this is a daily, and we had it below it for a while, and we had it here, but we never really closed below it on a weekly basis. So I'm looking for this. Okay, this is a very key line. So just follow along with me today. 18,434 calendar days ago, which is basically this right here. So as long as we stay up above this red line, I don't think we're done with our bull move. We get below it, we might need to get defensive. Okay, so every time we come on, we're going to be looking at this. And the reason I use the New York Stock Exchange Index is it covers a lot of stocks, right? So what else are we watching? We talked about this yesterday too. We're really keeping an eye on this yen. Our thesis is up here at this 161.8, kind of freaky, isn't it? But this is a pretty big top, okay? And we'll talk a little bit through the yen and the financials and how that'll be very important for us to watch. And right now, we rallied. What have we done? We've rallied the exact same that we did, I don't know, probably about, this is a daily, so this is probably about a month ago. So let's keep an eye on that. I don't see the yen getting any stronger until we blow through this level here, and that's about 144 to 145 on the yen. And what this level, this 0.618, this orange line, that's a 0.618 price rejection from the all-time, not the all-time high, from the latest high, all the way down, all the way up, and there's 0.618. And it's right on a key retracement level, so I would imagine that will be support. We also saw that this projection here, right, was the reason we bottomed here at the 147-ish. But for now, things will really start to cook off if we close below this 144, 145. And we've just done the same rally, so maybe look for some yen strength. We'll take a look at that before we log off today. All right? How are we doing with questions? The UI chart. Marley, what UI? I'll have to take a look at it. Okay. We talked a little bit about the 10-year interest rates. Why is this important? Well, because of debt, folks, right? Every little inch that the interest rates go up, it gets harder and harder for us to service our debt. I do believe we'll have a sovereign debt default here. I don't think it's happening anytime soon, but Europe and Japan, they're a mess. I think we're $37 trillion in debt. So, I mean, all things being equal, I can see the 10-year going up to 6% before we get a pretty big correction. I don't think that's over yet. I don't see a buy interest rates or sell bonds here. This is not a pattern. I'm just looking at account, quite frankly, and just saying, this looks like it should keep going up. The other thing too is this is a log scale, so this isn't a normal chart scaling. This is logarithmic scaling, and sometimes I think you can see the waves better that way. Okay. This is an important one. I look at this all the time. I think JC and all the stock market researchers, stock market media researchers do too. XLP is a proxy, if you will, for risk on, risk off. If XLP is, from a ratio perspective, starting to outperform the overall New York Stock Index, that shows that the big institutions, they are getting into more of a risk off mindset. If this ratio is going down, and so they're not really showing relative strength of staples, and the New York Stock Exchange Index is getting bigger, then it's more risk on. So let's keep an eye out for what's going on in the market. Is it risk on? Is it risk off? This ratio really helps us to monitor that. The other thing too is the ratio really works well with the patterns. We talked about this last week. I missed this 127 in this orange arrow. It's here. It's everywhere. I globbed off onto this that I thought would be support. It didn't. It smacked right into it. And we're down here, and I'll show you this chart here in a little bit. We're getting to a level where we should find some support in the ratio, which means what? Which means stocks get a little bit weaker, because if XLP starts to outperform, right, then you're going to see a risk off mindset. And usually that means we'll have some sort of correction in the stock market. Okay. So keep an eye on that one. It's fallen down a little bit, down to about here or so, but it's going to be a buy. Now, why do we really got to think about this? Because if you remember 2 weeks ago, I think we talked about it, it had completed the same measured move right here. Okay, see this black move? That's the largest corrective move in the XLP New York Stock Exchange Index since the XLP's inception, which I think was 1999. So we know why we found support here. Okay, it was a 0.618 price projection. It was a 0.618 retracement level. It was equal to, at one point, actually the same time, price and time of the biggest correction. So what happened? We rallied. Stocks sold off. But look at this wick. Now remember, we're way out here now on a monthly. Okay, these are monthly candles. If we go below this level, then we have a nice, beautiful buy XLP over New York Stock Exchange ratio pattern down here. This means to me that if we get a close below this level on a daily, maybe even a weekly, then stocks will keep going higher, right? So we're right at, and this is a monthly, so we've been messing around here for 3 months, right? We're right at the level. That's very, very important. So again, not necessarily looking at individual stocks. We'll take a look at a couple. We're looking at the overall mindset of these indices. We're not out of the woods. This bull market could continue, folks. But if we don't get a close below this level here on the XLP NYA ratio, then I think we could be in for some trouble. So keep these on the mind, right? Keep the trend line for the New York Stock Exchange Index, that 1x1 trend line. Keep this in your scan. And if we get a close below here, I'll be letting you guys know for sure. But it might be time to go long stocks. Then I would definitely sell stocks here. If we complete this pattern, they don't get any better than this, folks. Sorry, I got to take a sneeze real quick. Wow, sorry about that. That was a big one. How we doing? Sometimes I'll look at volume. Sometimes, a lot of times when I'll look at volume as a pattern's completing, I'll try to see if there's a divergence in the move with the volume. Like that, and I'll throw maybe an RSI up there every once in a while just to look for some divergence or see how oversold or overbought it is. But I usually don't put many indicators on there. Good question. So I thought here's another ratio for us, folks. And this is really important. And again, what's it do? It goes back to the yen and whether the yen is going to continue to strengthen or it's going to weaken. Right now, I'm of the mindset the yen is going to continue to strengthen. So take a look at this. So this is the dollar yen. And what we're comparing it to is overall a basket of financials through the XLF. The reason this is so important is, one, we can see why we're finding support down here. And we did it last week. We went through it. We have two little lines in the sand. Why is that important? Well, the yen and the financials, when this ratio starts to move up, it really causes a big sell-off. And we bounced, and you can see the sell-off occurred if you look at this candle down here, right? This is when we started getting the sell-off, and now what's happened over the past couple weeks? Well, the ratio has gone down, stocks have stabilized. Kind of crazy how all this works, right? So what I'm trying to do is find non-correlated assets, right, and ratios to help me look at things differently, right? Look at things that other people might not see in the market, okay? So keep an eye on this one. It's not out of the woods yet either. This is a 1.618 extension from this low right here. So it could go to there. And then we could have a price projection all the way down to here. That means the yen is not strengthening, folks, right? I just don't see that happening right now. So keep an eye on this one. This thing starts to cook off and go higher, then I would expect stocks to get weaker. All right. So let's keep watching that one for sure. This is the one that I really want to talk about. We talked about it last week. Nobody in their right mind is thinking we should short gold. I don't think we should, but like one of my mentors and good friends, Larry P, tells me, trade what you see. So I'm going to tell you, I can count Elliott waves. I'm not the greatest at it. I did teach it, but sometimes I'll say an Elliott wave count comes, which is a Ray Charles count, right? And what I mean by that is it's easy to see that it doesn't violate the 3 rules, right? So the 3 rules are wave 2 cannot go below, in this case, because we're going up, cannot go below the genesis or the beginning of wave 1. Okay, check. Wave 3 can't be the shortest. Check. Wave 4 can't go below the end of wave 1. Check. All 3 rules are satisfied. 1, 2, 3, 4, 5. Gold could be in the 5th wave, folks. And so it hit this target here, 29.80. I think it was 29.84. Initially backed off a little bit. A lot of times what you'll find too, I mean, look at these candles going into it. It'll go to 1.05946 times the AB leg. And that's the 12th root of 2. That ratio is how we basically tune our instruments, right? So equal octave scale, each note in the scale is moved by 1.05946. Now you can get into the Pythagorean comma, you can do 432 hertz. We'll just leave it at that. So we went up and we tagged it, and then it sold off, right? I threw some Adams pitchfork in there. I hadn't used it in a while, but I see this whole area up in here as a potential high for gold for, if not, a big high. It could obviously get a month or 2 pullback. So gold, I mean, the geopolitical tensions we have, everything going on, this doesn't necessarily fit the brain, but there it is, right? So how do you play this? So let's all don't jump in front of a train, right? I'll update you guys, but ultimately what I'm going to look for is a daily or a weekly signal reversal candle. And what I mean by that is it's simply a bearish or a bullish engulfing pattern, right? So whatever candle ends up making the new all-time high for gold, which you could have put in Friday for now, right? When the low of that candle is taken out on close, that's your signal. So some people will use an hourly, a 4-hour, a daily, a weekly, a monthly. The longer you go up in your time frame, the more risk you're going to have, but you'll be much more conservative. So I'm looking for a weekly or a monthly, not a monthly, a weekly or a daily signal reversal candle. Hasn't done it yet, right? So we'll hold. But I'm saying right now, I think gold's hitting some significant resistance, and we need to watch it. I did the ETF, I did GLD. And you can see we're smacking right into some nice price projections. And here's another little, if you start playing around with the Adams pitchfork, right, you have 3 points that you want to define. So you point here and point here. And a lot of times what people do is they'll just use this point. A very good technique is to actually keep that 3rd point and keep that angle of that correction continuing, and then go down to the low price. See how that looks a little bit better, right? So there's an artistry to it. And then we've got this trend line getting ready to bang right into it, right? So this whole area on GLD, I think we're going to be hitting some resistance, folks. So if not, then I'll erase, copy, paste, erase, and come up with some more targets. But right now, I think we're hitting the zone. They asked me to take a look at the gold silver index, right? So again, these are all just measured moves, and you can see the top was these blue arrows exactly, right? So we have another blue arrow right here, and then I'm just doing projection work, basic projection work. But again, like everything else, certainly it looks like we're heading into a nice area of resistance, folks, for the gold silver sector, gold index. Here was the monthly that we talked about last week, right? Nothing's really changed. This is a sell signal between 35 and 36 bucks. The big thing is if we blow through there, then I'm looking at 41, 41.67, 41.70. Why? Because this is a 0.618 price rejection from this low. See the gray lines? It's going all the way up to here, all the way down to here. And then we project, and you got a 0.618 right on a 0.786. Folks, you like that. Now, overall, big picture, right? We're going all the way back 1972 when silver was floating. Each low has been higher, right? It really has. So are we getting ready to parabolically go higher? I think we'll know here 35s and 41s. Right now, I'm thinking gold and silver will be shorts. Let's wait for a signal reversal candle before stepping in front of that trend for sure. Here's another one, very important. And again, start really trying to roll these ratios into your analysis. It really does help a lot. So what do we have here? So we have the staples in gold in this case, okay? And the staples in gold is the candles, okay? So as you can see, gold's outperformed, right? But what's really interesting, when gold starts to make its move, the ratio tops. Here we go again. In this case, the ratio bottomed. What happened to gold? It topped. The ratio is basically equal here, right? It fell down, the ratio bottomed. What happened to gold? Gold topped, right? Banged around, gold made a low, ratio made a high. So what really drew my eye to this, and remember, this ratio, when it bottoms, it has shown pretty much every major high in gold, okay? Why is that important? Because here's that same ratio, staples, XLP over gold, and here is a near perfect buy pattern. What's that mean? Well, let's go back. When the ratio has started to go up, gold's gone down. Folks, this right here from 2011 to 2016, that's a 5-year correction, right? It's like, whoa. So as the ratio bottoms, gold does what? Tops. So this, folks, is, you can't get any nicer than this to have a buy pattern here. So if our gold short's going to work, this ratio of XLP over gold will find support and start going up. So now we have another non-correlated asset that we say, okay, does this make sense? That makes sense? Yeah, I mean, it depends, right? Like Rich, or who was it? SM 2022, right? Depends on when you got in, right? I mean, if you got in 5 years ago and you just let it run, right? Or if you just got in, yeah, you might want to, right? So it's all your time frame, but it certainly looks like we're hitting some resistance in gold. And I really like this pattern because, again, we talk about these patterns. When the patterns fail, and they do, right? They tell you a ton, right? So what does this tell us? If this pattern fails, then we should expect gold to continue. It's that simple, right? But we've got a lot of support in here. And so that should have the ratio go higher, which should bend over gold and probably bend over silver. All right. So keep an eye on that one too, folks. Copper. So yeah, I don't know if you guys remember, we were looking here. It certainly looks like, look how strong it is. It certainly looks like copper's going to new highs, but look what's staring out in front of it. We got a lot of projections and a lot of resistance, just a little bit higher. But sure looks like copper is not going to get defeated here, and it'll break out to new highs. And so what did we do here? We took the all-time low here. Now, we've talked about it before, folks. I wish I had longer data, right? I wish I had data that took it down to the 1500s, for goodness sakes, if I could. But this is the best data I have. And I know that this works because I use this node to hit that retracement point. So we can use this to project from. So anyway, it's just a big picture projection, okay? And then you've got two, I like to call them fractal projections. So yeah, and then we have all these extension targets. So this looks like it should be a pretty big resistance area. It's about 5.78 to 6.3 in copper. If it gets through there without even like wincing, I'll be shocked, folks. But what do I know, right? Here we go. So a lot of questions have been coming up about Tesla. First off, really nice candle here, right? That's two hammers. It definitely found some nice support. What do I like? I love these measured moves, folks, right? You can see it. This was the last, if you will, largest corrective move in Tesla. And so I just want to show you here this gray projection I did. It's a 1.618 price projection, but then I always want to know, I'm like, okay, well, why did it go just a little bit higher? Well, 1.732 is the square root of 3. Use it all the time. It did a square root of 3 projection. It's crazy, I know, but maybe it has something to do with all the SpaceX rolling around up there. So pretty big thump, right? And so if you look at this, it looks like, okay, we're gonna get a little bit of bounce and then maybe roll over one more time. And so I'm seeing 184, 185 on Tesla as a big buy area, okay? A measured move goes a little bit lower into the 170s. But why do I like that 184 or 186? Because the 0.618 and the 0.786 are on top of each other. You want to trade that. You want to be there for that. So I'm seeing this as a bounce support, but ultimately I'd like to see it roll over and we get a buy there, okay? This one I'm loving, guys, all right? This is 2020, so this has been 5 years in the making, right? 5 years in the making. What do I see? I see a triangle. And a triangle consists of 5 legs. So we go up, or excuse me, we go down, we do a little correction and thump, ow. So now we go A, B, C, D, E, okay? This is a guideline, not a rule, that each one of the subsequent legs of a triangle will be 0.618 of the other one. So this 233 to 239 level, boy, that'd be a nice short. But we could stop anywhere in here. So I'm projecting up. If you can see this, I can go real time on this for us. 202 could be the end of the triangle. But if you can get a good triangle, this thing will fall like a stone. So keep an eye on Boeing. I know they just won that huge contract. Pretty crazy stuff at that plane, man. Amazing. But and honestly, it's been so weak. I'm just kind of going, man, is it ever going to make it up there? But with that announcement and everything, we get up into these, let's say, mid 200s. We got to take a crack at short and Boeing for this move down below this low right here. Now, if we get up above this trend line, then all bets are off. Okay, the pattern failed. But for right now, interesting. We really should take a look at this guy. I'm seeing a triangle. A, B, C, D, E. We'll see. All right, so we'll get some real-time charting going on, but let me see if we got any questions. All right, that's awesome. How about them pyramids, folks? Hopefully you guys have heard about it. Like, look over here. I mean, it boggles the mind. It boggles the mind. If this is true, I have no idea. But this is unreal. They found a vast city underneath the pyramids. And some of these things going down 1,800 feet. Right? And then over here on the left, I had an opportunity to be on a podcast with Alan Green. Not sure if any of you have ever heard of Alan, but he's found secret hidden codes, and it literally is the Da Vinci Code by Dan Brown. But He's found hidden codes in the Declaration of Independence, Constitution, Bill of Rights, Gettysburg Address. Yeah. And what we did is we went through just the dollar bill, and it took us 2 hours. It's unbelievable, folks, what he's uncovered. And the message is really, really powerful. So I hope you guys watch it. It's going to drop on Wednesday. And it's pretty wild stuff. So I know I closed it last week with the great filter theory. Are we really alone? And then I had to put it back up there because now we got vast underground cities, orbs flying around. I don't know what's going on. Let's just look for a pattern and give it a shot. So that's it for the charts tonight, guys. Let me see. What do we got? Oil. Yeah, I can take a look at oil. All right. So here we are, real time, looking at the ES. I mean, we gapped up. It's not looking too bearish, is it? But we got a long way to go, don't we? Guys, I'm not really seeing anything. What I can see is this was a correction. So 56.54, right, is really going to be our important line in the sand for the bulls. Okay. The other thing I'm looking for is I'll go out to like a 4-hour here. Is, by the way, if anybody knows how to get rid of this with TradingView, let me know, because I just started getting the sessions, the trading sessions on it. It's like, what's happening here? So here was the big, corrective move that came down, right? So what I'm looking for is I want to see the corrective moves, right? And what's happened is we've already surpassed it, right? Here was the biggest one. I think we put that one up like a week or two ago. So see that? So we've already passed it. So what's it like to do sometimes? Well, sometimes it'll go 1.618 that. So I'll just do this little handy dandy here. See that 1.0956? That's from doing the gold work. So what I did here is I took the largest corrective move and I just basically harmonized it. So here's the largest corrective move right here, right? And I just took 1.618 of it. I've never really done this before, folks. And well, would you look at that? Shocking, I know. I'd never done that before. I was like, let me take a look at it, right? So, man, that's pretty trippy. I hadn't done that before. I've done the 1.618, but I hadn't done it on the ES. So we're going to come down here and this is bouncy, right? But is it strong? Man, I don't think so, right? So this is where we were. This is where we were last week. So we really haven't done much, right? We haven't continued this big sell-off, so that's good. We really haven't bounced that high, so that's good. So I'm kind of neutral, 50-50 here. But again, what we want to see is we want to see a little bit of a pullback and then another move up. Then we can project. Right now, it's hard to project, okay? And what do I mean by that? I mean, take this swing here and then double it. That could be a great target. Again, folks, this is all happening real time. I didn't realize that the target would take it right to the 0.618 retracement level. The reason that's key is a lot of times when we do the work with retracement grids, we just throw the retracement grid up there and we don't project down to where this thing could go. And so it goes through the 0.618 and someone, this doesn't work. It's a pattern, right? You have to project where it's going to go, and then you use extensions, and then you use retracement. So that's all I'm doing here. And I'm using the natural harmony of these bigger corrective moves. Right? And so what I'm doing is I'm building what we used to call them LAR, launch acceptability regions in the jet. I'm building a launch acceptability region, right? I'm building a LAR where I can deploy this weapon. Doesn't have to go there, but I'll be interested in it when it does. See, it didn't even do that. So we got this guy here. And folks, it does it all the time. It just measured move after measured move after measured move. So right now, had the gap up. I would see maybe that'll continue higher, but watch that 59.15 also. Okay, keep an eye on that one from the ES. How's our gold doing? All right, nothing really. Here's the initial target. I'll call this up for you guys. And that's when you got to get to time. Get the timing right. So here's the 1.05946, and here's the ABCD. See that? And it didn't touch it exactly, but it kind of came up to it. So that's what we're dealing with, right? Again, remember the ratio, okay? That ratio is going to be key, XLP over gold. Where's our, I've got to go to Bitcoin for you folks too. Messy. Close this gap, see that? So close this gap, expecting the rally. Remove 5 drawings. So this got my eye right here, folks. See that move and this move. So we're going to just do this real quick. And you don't have to be exact. Well, you will. Right now, I'm just doing it real time, trying to get you there. No. So let's just do that. So Bitcoin, I'm looking at about 97, 96. We should run into resistance. I'd like to see another move down on Bitcoin, right? I'd like to see one more move lower. And then we can take a look at maybe sniffing it, at buying it. But right now, I think we hit a pretty big top of Bitcoin too. But this rally, let's say it stalls in the mid 90s. Okay. Oh, okay. Bottom right, click extended hours RTH. Bottom right. I'll have to do that. Thank you for that. Oil. Yeah, you know, oil's looking heavy, isn't it? I haven't looked at oil, and I'll tell you why. I don't like that it went down to like minus $40, because then I'm like, what do I use? So you see that? Yeah, I think it's going to be heavy. But let's take a look at buying it. Just doing a retracement grid, and you guys will see where I'm going with this, hopefully. So I'll get rid of that guy, get rid of that guy. We'll keep those guys, okay? So I'm looking at this. That is what caught my eye. And it's just a little lower. So that will be key support for me, 61.99, basically 62 bucks. And then it'll be hard to project here because we want the retracement to go at least 50%. So you really don't want to be projecting that. But this looks like we haven't had a close below it, right? We're on a monthly. We've yet to have a monthly close below it. Look at that. And that's 4 years. So we get a good sell-off going here. Yeah, I could see this thing getting going for sure. Okay, what else? Bitcoin. Hood. I've never looked at Hood. Robinhood. Actually, I did look at Robinhood. This is pretty amazing. And if something pops out at me real quick, I'll bring it up. But right now, there's no pattern for me, right? So I'm just kind of messing around with it. There you go. Look at that, you guys. Isn't that amazing? It's the same moves all the time. And then how about this guy? I don't know. And I'm just doing this real time. You just got to start training your eye to see these moves, because your eye is the greatest quantum computer out there. I will say, anyone, Bueller, help me. 0.382. There we go. And what I did there is I'm just making it 0.382 of this overall big move. And I'll just bring it down to there, and boop, there it is. It's all harmonic, folks. Isn't that crazy? I don't really have anything what I'd love to see for Hood. Yeah, I'll take a look at CME real quick. For Hood is I'd love to see it come down, come up a little bit, roll over, and then we look to buy it. Right now, I don't have much to do here. I mean, I could probably go to a daily, but I hate to force it, right? I don't want to, coulda, woulda, shoulda. Something like that, but that's a force. I'm forcing that. So I'd like it to come up to about here and then roll over and then look to buy it, right? That could be correction complete, but it certainly looks like it wants to go up a little bit more and then roll over. Nothing's standing out like crazy. Wow, it's strong, CME, huh? Oh, okay. See a pattern. Come to Papa. So first thing is, a lot of times, not all the time, right? A lot of times, and that's why I love to go out to monthlies too, folks. It gives me more time, right? So a lot of times, the last move and the first move will be equal to each other. Hello, isn't that crazy? And they are. And so what I'm seeing is what could be called a 3 drives to a top sell pattern. So it would go something like this. All right. So we already got that, right? It's strong though, guys. This is strong, man. We already have that. And then we have the completion, which is up at 290, about 293. And so in order to get this guy, now we'll do the extensions. There we go. See what I did there? So that is a 141.42% retracement, right? It's an extension. It goes, as soon as you go through that old high, you're now extending off it. But because it held as resistance and the market sold off there, that's a time cycle, folks, right? That's why you use it. All these little places are important. Boom, we got that right there. And this is how we walk our way into a zone, an inflection point. Get up there. There we go. Okay. So this is a 3 drives to a top. That is right there. Now, we've already completed this, so I'll change the color for us, right? Let's get a little bit official here. How about orange? Let's use orange so we don't get confused. Man, CME is a beast, huh? Thanks for bringing that up. I hadn't looked at that in a long time. So now I'm going to do this too. Here's my low. Here's my high, and voila. Huh. Look at that, folks. That high was a 1.68 price projection. I didn't know that. I'm just doing it real time. And the reason I keep bringing that up is because the market don't care. These numbers work. It is very impressive, though, that it blew through it with just a little bit of a pullback. How much of a pullback? I don't know, probably about the same one as the last one. There it is. I wish it could be this easy, right? Why isn't it? But anyway, so bullish CME. However, we bullish from the perspective of I can see it going another 20, 30 bucks up into here, but then you might want to take some profit. This is interesting. So that would tell me we might have some resistance coming. And then we've already shown that this wave is 1.618. That way. Isn't it amazing how it all fits together? It's crazy, isn't it? So oh, I did it wrong. Remember that square root of 3 we were talking about? There it is. Just kind of, you see it, you start seeing it. So that's a 1.732 price projection. Actually, there it is. Banged right into it. Isn't that crazy? CME, I see resistance in this whole area. It's very strong. So wait for a weekly signal reversal candle to take profit or to short it. But right now, it looks like it's ollie income free. All right, we've got about 3 more minutes. What else? ICE. Oh, Palantir. I didn't. I can take a quick look at Palantir, and then we'll call it a call. Go watch some basketball, right? Man, I had some good waves today, guys. Woo! Look at that thing. Holy shit. This is a rocket ship. Okay, nice. So Alt L. All right. What do we got now? I went to log scale. Right now, nothing really sticks out to me, except it's a rocket ship. Very big rocket ship. When you look at this candle here, and that's why, folks, I was taking a look at NVIDIA, all right? And we went over it last week. I think this is a third wave high. So everything's a little bit kind of like, which way do we go? But if we get a little bit of a rollover again on NVIDIA, I want to buy it. And watch now, because this thing could be getting ready to take off to all-time highs. Because when I look at this, I see this move right here. Wham, hello, big candle. Wham, hello, big candle. Wham, hello, big candle. Little pullback, big candle. That's a third of a third. That's a third of a third wave. So if we look at this and we count, we go 1, 2, and then this whole thing is 3 waves. We end third wave up here. We go down 4, we go down 5. That's 3. This thing could go to new highs. But my Elliott wave's like my golf game. I've told you guys that. If you see me doing that, sub waves and everything, don't pay attention to it. But look at this battle, folks. Right? You got to think about what's going on. A lot of people with a significant amount of money, i.e., institutions, are like, "Do we get an NVIDIA or not?" Look at those wicks. It's been free for all, hasn't it? So when I was going back to Palantir, this looks like a third of a third wave, doesn't it? Doesn't it? So now what I'll do, hopefully you guys like this stuff because it's pretty crazy stuff. So I want to know what this corrective move was. But what do I want to know about it? I want to know the percentage change. All right. I did not need to know the angle. There we go. So this was an 86% correction. Control CV. So let me move to there. And we went down to there, right? So if we're going to do an 86% correction again, we go all the way to there. I don't see that happening. But what we can do, if you want to do the math real quick, is you take 86%, multiply it by, let's just say 50%, right? And that would be what, a 43% correction? So 50, look at that, 42, 43% correction. So pretty nice. So you can use the percentage corrections and make them harmonic is what I'm saying. And that'll work too. I want to see if this thing bounced with as much strength as it did off the 3 too. Sure looks like it, doesn't it? And if you guys want me to look at something in depth, yeah, boom. During the week, just pop me an email. I'll take a look at it because I can't keep up with all of them. I got mine that I look at. I'm still long DBA. I'm still long UNG. Still long TBT. I got 1,000 shares of PSIL, which is a dog, but it's the psychedelic ETF. I'm involved with some nonprofits that have done some amazing work for veterans in the psychedelic space. So I'm like, I think this is coming. So I just bought 1,000 shares of PSIL. Stupid. What are you going to do? So you see how these candles came straight down? I want to see it rally, and then I want to see it roll over again, and then we need to buy it. All right? That's what we need to do. And that would be awesome. Because why, right? Because I'm just trying to look at the corrective form of it. That's all. See, we really haven't done much. So expecting a rally up in here, pause, stop, yes, please, fall back down. Now I can project, I can extend, I can do some square routes. Right now, it looks like we're just rallying off of a high and we've got one more move down. Okay. Hey, Daniel, I trained with Larry Pesavento a lot. In fact, they're in our emailing this weekend. And when I first started out, I go, so Larry, what's a good month? And he'd say 1 cent. And I laughed. I'm like, you gotta be kidding me. He's like, you're going to get your ass kicked. And you know what? He was right. So, Daniel, you got money out of Palantir? Check. Doesn't matter. 1 cent or $1 million. Right? No regrets. No regrets. So, all right, you guys, I love having you come out here. Pop me an email. Give us some feedback. You know, basically, what are we trying to do? We're trying to set the tone for what's coming up. You know, this week. Ultimately, I saw last week as a bounce week. It did bounce, but it really didn't bounce that much. However, we really don't have a lot of technical damage done. We have some technical damage done, right? So I'm thinking Wednesday, Thursday, the middle to the end of this coming week is going to be kind of like a little bit of a judgment day, just from a timing and cyclical stuff. But I wouldn't be surprised if we rally a little bit more. But again, remember, we have the XLP over NYA ratio. We have the pound versus we have the yen versus the financials with XLF. We have XLP over gold. That's showing us a massive buy pattern, which is shown to be major tops in gold, right? So we're getting to some pretty key inflection points, right? We talked 2 weeks ago about the transports, the long-term projections being done, the transports, the long-term projections being done on the semiconductor industry, right? So nobody really knows whether we are going to continue this amazing run or we're going to pause and fall. And some people are saying that the charts look exactly like we could have a crash. I have no idea. Use a stop. So thanks for joining me. I really appreciate it. Hopefully you learned something. Hopefully it'll help you manage risk because that's all we can do, right? And that's all.